That's going to mess up my recording. Okay, it's fine. Okay, so my screen, that's what I wanted to share. Yeah. Okay, so what was this? Oh, this was one short scalp I did on USD this morning. This one is done. Profit is made. So let's jump over to what we have to discuss today. I said we're going to start up looking at EURCAD, pound dollar, Aussie CAD. We'll look at crypto, and then we'll look at USOIL, and probably maybe look at gold. Okay, so let's start off by looking at EURCAD and what we anticipate and how we plan to play that out. So EURCAD is the first on our list. Now, basically, I like to do kind of like a top-down analysis, have a long-term overview of what the market is doing, then create a short-term buy, a medium-term bias, and a short-term bias on how I plan to take advantage or trade it. So that will then produce my confirmation, negation, and my point of interest areas I'm looking in the market to identify zones. Okay, so looking at this, right, EURCAD has been one funny pair, but if you zoom out, this is a daily chart. So if you zoom out, what you notice is, we had this region here where the market was in a downtrend, and then we had this, very aggressive rally up. You could see how many months. So if I'm to measure this, it took 511, or let's just say 500 bars. That means 500 days, right, for this market to drop from this high to this low, right? And then it took something like 29 days to go from the low to the high. So this kind of swings, aggressive swings in the markets, they're not always there, but once in a while, when you find them and if you're able to take advantage of them, you could be in a run. Now, the point is, during this phase, we had this aggressive push up. Then we had this aggressive, aggressive push. We had this aggressive push down, not necessarily aggressive. And then we had this very aggressive push up. Now, since stopping out here, so this would be our high. Since making this high back here, you would notice that since making this high here, you notice the market has been in a downtrend. The market has since not taken out this high, it has just been falling. And then the structure has been clear. The market has been making lower lows and lower highs and lower lows and lower highs. So we had this was not too low because then it did reject it. So we have this push up, push down, retest, and now we've taken out low. Now we had this high, which has now been taken out by this. So clearly, what does this say? What it says to me is, well, we are in a bear market, we're in a bearish market as far as EURCAD is concerned. And we have to respect that, at least on the longer time frame, this is the bias in the markets, right? Now, this doesn't mean that the market will not push up. What you realize is, even in this bear market, the market seems always retraces. And then sometimes they may provide us opportunity, even though predominantly we try to trade in the direction of the trend. So what we know now is the market is bearish. The last impulsive move down was this one. This was a retracement. Now this retracement falls short of my actual targets because, so here's the thing. I was actually anticipating, for some of you who follow me in the classes, I was anticipating this to go all the way up to at least this point, or maybe even as high as this point. Now, that's been the case. That is expected as far as price does not take out this low. So this rally up here, while price was making all this move up here, I was involved in buying. I actually started buying around here. And then all this move up, I was involved in buying. I did protect most of my my trades here, expecting to see price hold this low. Now, with taking out this low, what it means is most likely we're going to, we might see a continuation of this trend. Now, when I see cases like this, so if you are an Elliott wave trader, you understand the concept of Elliott 1, 2, 3, 4, 5 wave. So you know that this is our wave 1, right? Our wave 2. This is our wave 3 here, right? Our wave 4 and our wave 5. Now, usually, what I was expecting is after the as an Elliott wave strategy trader, after wave 5, you usually see a wave 1, 2, 3 going back to challenge wave 4. Now, so far, that has not played out. I was expecting this to at least push back up to around the zone of wave 4. We didn't play out, so we have to be constructive. Now, success in trading is all about knowing when to change your bias and having a point of negation, and if invalidated, should then proceed to cause you to look at the market from a different standpoint or a different point of view. So basically, with this in mind, so we had this break of structure down here. So here's what I'm looking at. We had this break of structure. The markets, we had this break of structure where the price took out what is supposed to be our protected low. Now, with this, what that means then is we're looking at this impulse move downward here. So very likely what we're going to see is a push back up into one of the last percentage zones. So I'm looking at, one of the key ones that I can spot. So if there are actually a few, there's one here and there's another here. Now, so what we would likely see is we'll likely see price rally up to one of these points. If you understand the concept of Fibonacci and you draw your fib from point A to point B, you'll notice that, we're expecting this to rally into one of these zones maybe before continuing the downtrend. Now, we could see this ideally within the golden ratio falls between 38.2 and 61.8 fib retracement level. So I'm going to take that out because it's confusing us. So with this in mind, we could see this rally up to this area or rally up to this area here before we see the next continuation downward. However, we may see a break, the negation of this, although this will probably not play out this week. If we take out this high here, if the market takes out this high, so if we take out this protected high, this is supposed to be our protected high. If we take that out, then it means we are not going to be looking at the price going up to our points of interest in the first place. But for now, we have to find a way to be a participant in this market looking for buying opportunities. So at least take this here or take this here. Now, this doesn't mean that you just simply go and buy from here and then let's say put your stop loss here, and you can see that the risk to reward is not nice if the market decides to stop here, or even this is not that nice. So what you can do, or what you should be looking to do, is go into the lower time frame. Let's say go to like the 1 hour chart, for example, and look for structural shifts. Right, so you look for structural shift. You can see here. So this is what I mean by structural shift. So where's my part 2? So you can see here that within this range, you see how we're making lower lows and lower highs. So you can see we're making lower lows, lower highs, lower lows, lower highs. Clearly, we'll be making market structure has been bearish, right? Okay, my system is freezing. Okay. All the way down to this point. So up to this point, we're still making lower lows and lower highs as price is moving. But then notice what happened. We've shifted in the sense that we've taken out previous high, and then we may or may not have produced a new low. We would know until this high is taken out. So it seems to have taken it out. We could see this come back down even further. Well, from where it stands, you can see that structure has shifted. So if you're looking to participate in this market, so let's say this comes down a little bit, look for some sort of confirmation in the form of maybe Y curve, if you're a smart money trader, or some price action continuation candlestick around this area of support, more or less, of what we call demand zone. And then once you have that, you can then look to participate long term. So you can then look to participate, and let's say we have this pullback, and then let's say you look to participate once we have that structural shift. You can then put your stop loss tight, and your risk to reward ratio, is going to be much, much better, as opposed to just trying to buy here, place your stop loss here, and hope it goes up. You have to remember that sometimes the market will not do exactly what you want, and what you want is when the market doesn't do what you want, you don't want to be losing a lot, but when you're right, you want to win a lot. So you want to make, when you're wrong, you want to be a little bit wrong, and when you're right, you want to be a lot right. This is where we now start doing what we call multiple time frame analysis. I teach that as well. MTFA, where you have a bias based on the bigger time frame, and then you drop down to smaller time frames to look for confirmation of that bias and how you plan to trade it. So on EURCAD, this is basically my idea. For the week, we would likely see this go up. We'll likely see EURCAD go up at least to around 45.50 or 45, anything between 44.90 or 4400 to around 4600, and that should be about 200-300 pips move on the swing. So even though we're talking about a lower time frame, it is still a very big swing if this does plays out. So that is that on EURCAD. If you also looking at trend line break, you can simply just have your trend line drawn like this, and then just simply wait for a break. So this is another way to confirm your trade. So you can see how we had 1 touch, 2 touch, 3 touch, 4 touch. If we break this, right? So let's say, so as a price action trader, if we break this area, let's say price doesn't come back down to this zone, right? If price doesn't come back down to this zone and give you confirmation. Now, just if price comes down to this zone, doesn't mean you instantly start buying. You look for confirmation in the form of price action candlesticks, spin bar, engulfing bar, and all those funny things. Now, on the other hand, if price doesn't come back down and we break this trend line, that could then offer you an opportunity to participate in the market. So if let's say the market continues to rally, goes up, takes out this trend line, we test it, and we then find confirmation here in the form of candlestick setups, we can then look to trade this higher. However, any trade from here, you want to make sure that you are aggressively trading your stop, because we're already close to an SND zone, to a point of interest. So if the market does that, you look for a buy based on confirmation. So you look for confirmation based on your own preference and look to trade this all the way up. So at least this way, at least look for a 1:2 risk to reward ratio setup. That might be nice. Okay, so that is that on EURCAD. Let's go over to pound dollar, which we discussed last week. So GBP USD. So GBPUSD was one we discussed last week, and this one is delivering to us beautifully. So totally, I'm already up like 400-500 pips already on this in total. I discussed this last week. When I talked about this trade last week, this is where price was. I'm sure some of you would remember this. And I said, we have tapped out. You can see the same idea. We had this market. The market is still bearish. The structure is cleanly bearish. You can see we've been aggressively bullish all this way. Since tapping this high here, we have continued to push down and make lower lows and lower highs. Now, even while this market was aggressively going up, and most people were thinking that this thing was going to keep going up, well, I was actually buying, but I closed on my buys around this area when we hit yearly pivots. And then when we tapped into this SND zone or this point of interest, I looked for some Wyckoff distribution to sell this back down. And so far on this trade, personally, I'm already up like on one trade itself about 240 pips, but that is on if I just took one trade here. I had multiple entries based on confirmation on the lower time frame. Now, for now, as of this morning, I was anticipating that we would see a trade to take for people who missed out on this trade. However, it seems that the market has also moved on without giving us that what I call it, without giving new entry criteria. So let's say let's jump down to the lower time frame, right? So you see, so this, I had an entry here, I had another entry here, and an entry around this area here. Now, as it stands now, what we're looking at is a market that is, bears are clearly and aggressively in control. So what this then mean is we would like, when I see a market like this and I'm already participating, what I like to look is where is the market likely going to, stop or at least find pressure. Well, where does the market wants to go to, or what I call liquidity? Where is the liquidity the market is targeting? Now, there's liquidity, imbalances here. This yellow box I drew here, these are imbalances in the market that the market likes to fill, right? So I was actually, when the market opened, it was somewhere around here. I was anticipating we would see a push back up before this drop. But as it stands now, there is no push back up. Now, if you are not already in this trade, then you want to stay on the sideline for now. What you want to then do is look at this next potential area. So where is my box? Now, from this high to wherever this low would be. So the low, let's say, for example, is here. So what I mean by a low is a candle that is lower than 2 candles to the left, lower than 2 candles to the right. So for example, you look at this candle here, is lower than 2 candles to the left, lower than 2 candles to the right. That is the low point. The market retraces. The same thing for the high. So let's say this price puts in a low price somewhere down here, right? What we're looking for is we want to see the retracement, because we know this market, even though as much as I want it to drop down to the moon, drop down from the face of the earth, it's unlikely going to do that. You can see when it's going up, it is pulling back to go up. The same way when it's coming down, it pulls back up to come down. So I also expect that we'll see some retracement. So look for retracement. Your goal is to try and then be a participant as a seller in this market with confirmation, right? With confirmation. The negation, or the point of negation, what will negate our trade outlook is if price closes above this high, and that is our protected high, more or less. Now, when the price when it makes that low, you can, if you're a fib, you can just use your Fibonacci, draw from high to low, right? Wherever the low is, we've not set the low here, but let's just assume it's here. And then you look for retracement into like the 38.2 fib level, or the 50.0, or the 61.8 if you are a fib type of trader. On the other hand, you can also look for SND zones into some of the last up move before the down move. Now, with that, where will your targets be? You should always have 2 targets, at least multiple targets in mind. If we push back up, so for example, let me use my part 2. If, say, we drop down, so let me zoom in. Say we drop down further and then start pushing back up, and we push back up into one of our fib level, or one of this demand zone, or point of interest, and we start dropping. So you find markets comes here and starts distributing, and you find a way to participate in the trade. What you can then do is, let's say you start selling from here, your stop loss obviously above the structure, depending on how you prefer to trade. Your first target should be the liquidity that rests below this low. So the first target should be here. And then your next target should be down here at the liquidity that rests below this low. But you also need to understand that the markets might not deliver to you straight. So you want to probably partial out, take some trades, take some profits from your trades, adjust your stop loss to break even or better, and then allow the rest run based on our overall paradigm, overall trade idea, that if we are still in the bearish structure, which you can see clearly, so the bearish structure is evident, very evident from the fact that you can see how from making this high back here, price has been bearish, clearly making lower lows and lower highs, and lower lows and lower highs, and lower lows and lower highs. Now, even with this whole aggressive move up, you can see how it is still a lower low compared to the overall protected high. And now, since we are tapping this, what is it going to likely do? Well, it's going to likely make new low. And I really like, so this is 2020 yearly pivots. So the pivot for the year 2020, right down here. So I have a bias that price wants to at least gravitate toward this point in the long term before maybe finding what to do, right? Because we've tapped into 2021 yearly pivots, but we missed 2020 pivots. And so price may likely find its way back down to this area, but this move would not be a straight move. The market will not just move in a straight line, but constructively, we might see this. And then, the trade I took up from here, I might be holding at least some portion of that trade for several months to try and take this back down on my account. So, but however, I will be managing my trades properly trying to do that. Now, that is on GBPUSD. Let's jump over into some cryptos. Let me just do BTCUSD based on popular demand. A lot of people seem to be asking me that. Now, for those of, I don't know how many of you were able to watch the analysis I did on BTC last week, why price was still up here. If you didn't, just go and check it out on YouTube. The YouTube handle is Noah FX Pro. So just look for Noah FX Pro as my personal YouTube channel, and you see my analysis on this. So Noah FX Pro. Now, as at the time, price was trading around 45K, right? 45, 43,000 or thereabout. That particular candle was aggressively looking like it was going to be bullish. And so people were looking at this, right? So most people were looking at this and saying, well, this is a low price here. So where's my pen? So we're looking at this like, okay, this is a low price. Price has formed a pin bar and, is rallying. And then we are going to likely see this head to the moon. However, I wasn't of the opinion. I wasn't of that opinion for a couple of reasons. First of all, the market always moves in such a way that it balances out. You can see, for example, when the market moved straight up like this, it left imbalances in the market that it came down to fill after several months, right? In October 2021, we had imbalances that the market came back to fill in December 2021. Right now, you could see, so down here, if you're looking, okay, let's go to the weekly chart, right? So I'm not going to go too much into this. I explained it a lot in detail in my the YouTube video, so you go and check it out. But there's imbalances resting in the markets, however you want to call it, pockets, imbalances. You get the concept. So from where we stood around here, there is a lot of imbalance in the market, which the market usually tends to feel. And there's something you also need to understand is retail are usually wrong. When most people feel price would go up, price usually comes down. And so when people start getting excited about doing a particular thing, usually see the price do the reverse because, well, most people were looking, oh, this is protected stop, and we're looking to participate in this. And notice how price is leaving pockets to the upside. So here's what I mean. We have imbalance here. We have price pockets around this zone here that the price has left, which it will come back to in the future. How soon that is, I don't know. But the price will come back to fill all these imbalances in its own due time, right? Now, in doing so, in creating this imbalance, it's going to fill previous pockets or previous imbalances in the market. You can see also another one here. I don't have to draw that one as well. So now we have filled all the imbalances resting here. You can see this red zone I highlighted. This is kind of areas I'm looking to. We would see, we could start to see some kind of reaction in the market. So let me do this. Let's draw this down. So this is my point of interest. I'm still looking to see some sort of confirmation as to whether we would see this start pushing up. However, we've tapped into the zone, a zone I'm interested in. We might see this drop down to 28K, maybe less, 29K, maybe less, or we see a rally. So we also have this trend line, which has to be broken if price is to continue much higher. Now, if we look at, let's look at this. If we look at our momentum oscillator, what you notice here is this. While price is making lower lows, right? What is momentum doing? Momentum is divergent and is making higher lows, right? So if anything, this is telling me, first of all, the market is quite oversold. We've tapped into the zone, into an area. What that means is we most likely will see the market either stall. So the market could start to range, start to accumulate, price could distribute, accumulate here a bit, maybe go down a little bit before pushing back up, but the market is giving us sign of a potential reversal. Now, potential reversal doesn't mean we go back up to 100K or something like that, but with this basic idea, I have a point to where I want to start looking for opportunities to participate as a buyer or holding, however it is you want to do. So that's that on Bitcoin. I'll be talking more of that on my cutting-edge trading room. So if you want more information, make sure that you have a funded account and then talk to your account officer to add you to my trading room. Okay, so USOIL. Okay, I think we have AUDCAD. Let's look at USOIL first because it's directly proportional to the CAD. So last week, for those of you who were also on the weekly market outlook, where price was sitting below this low, and I was telling you guys, see, I know everybody's expecting we'll see this market, we expect this area. But that's what happened when everybody's looking at a particular thing. The market tends to do the opposite. Well, just as I said, more or less prophesied, we took out the high. We took out the high, took out everybody's stop loss that is resting above this area, took out all their buy stops, and now we've come back and closed within this region. Now, based on my style of trading, which I look for long-term opportunity, look for long-term bias and then short-term bias. What you notice here too is this structurally, we have been in a very, very aggressive and clear uptrend. The uptrend has been clear as day. It is visible to the blind and audible to the deaf. Nobody can dispute that this is an uptrend. So we have been in this uptrend that has been aggressive. Personally, I was actually thinking that we may see the end to the uptrend, but since when the market failed to take out this low, I had to respect the fact that bulls are still in control. Now, when it made this low, which was also higher than the previous low, they made this high, it came back, make this low, and we had this break of structure. So this could be, you could consider this, so let me delete that. So you could consider this entire move here, the break of structure to the upside based on the overall, based on the bigger time frame structure. Now, with this in mind, what are we likely expecting? Remember, our job is not to predict price. Our job is not to be right. Our job is to be profitable. So just because I was hoping or expecting price to drop and price doesn't want to drop, doesn't mean that I will now be stubborn and still be trying to hold on to my bias. I'm unbiased. I try to follow price and trade in the direction of the money flow. Right. So now we have made this big move to the upside, this impulse move to the upside. Now, here's the thing: the market might still be interested in going up further simply because it has taken out this high, but it's not going to just go up in a straight line. We would likely see some kind of pullbacks to make a new high, or maybe get some pullbacks and take out new low and change structure. But as it stands, we are more likely to go down than we are to go up. Now, if that were to be the case, what are some of the areas, what are some potential areas that the market could come down and find support? One of the first things you can do, simply use your fib to draw your fib from A to B, look for some of your golden ratio levels, which would be like your 32.8 fib level to like your 61.8 fib level. Now, as a Wycovian or as a smart money trader, sometimes what I like to do most of the time is look for point of interest. Some of the last time move before up move. And so these areas down here look interesting to me as where potentially, which lies around the 78.6 fib level, I think, that we just drew. So we could see price probably drop down into these zones here before we will maybe start seeing some kind of accumulation to then take it much higher, or maybe we see a break of this negation area down here, the protected low, to then change structure to start going lower. But for now, if you're going to look for anything here, it should be for selling opportunities to then take this lower. Now, just because we're looking for selling opportunities doesn't mean you start selling. You have to find confirmation in a way that suits you. So if you are a price action trader, this would have been your confirmation. Bearish pin bar, you could have looked to trade the 50% retracement, which have been in the trade. If you are a volume trader, you obviously use your volume indicators and try and figure out that or other block. However, what I would like to see is some sort of distribution, let's say on a lower time frame, like 45 minutes, to then look to participate in this. However, this is not one of my, I don't trade US oil. I don't really trade US oil. I analyze it and look at it and figure out what I'm looking for in the terms of how it affects the card baskets, right? So, and based on this now, on this lower time, what you can notice is we've shifted structure. So I hope I'm still within my time. So shifted structure, you can see how we have been bullish all through this region. So if this would just respond to me. Okay, so you'd notice that, I don't know why stuff is frozen. Okay, so what you notice here, what I was trying to say before the mix-up is you could see how structurally price has been bullish making new highs, making higher lows, making new highs and making higher lows, up to this point where we did what I like to call weak to strong hand transfer. You can see how price took out this low, made a new high that is lower than the previous one, and then take out this low. And now from where we are, we're sitting at the high that is also looking lower than the previous one. And what is more likely to happen, we're going to come and run the liquidity that rests below this low. So this is what I like to see in terms of structural shift, and then I figure out how to trade this on the lower time frame. Now, I'm not going to trade I don't trade US oil, but based on the direction of US oil, it can give us an insight into what the CAD basket is most likely to do. So if the oil gets stronger, the CAD gets stronger. If the oil gets weaker, the CAD gets weaker. Now, based on what we're looking, we are potentially looking at a much weaker CAD going into the week. Now, with that in mind, let's go back up. So a weaker CAD favors our EURCAD trade. It also favors our next one, which is AUDCAD. So AUDCAD, AUDCAD is also one I had in my interest. I had interest in looking at last week because of the way where we were in price. So just like EURCAD, we are clearly in a downtrend, so it's obvious. You can see since making this high, we have just simply been making lower lows, lower highs, lower lows, and lower highs all through, right? So we have structurally been sound. The trade structurally, the market has stayed constructive, bearish, all to this point. Now, at this point here, we made a low that is lower than this, a high that is lower than the previous high. And so naturally, what we want to see is to make a low that is lower than this one. However, when we got toward this the SND zone here, we struggled. So what that is saying is, if we fail to take out this low price here, more likely than not, we are going to take out this high here, right? Now that is a very, very long prediction and a long move, which may or may not happen. But as long as price stays above this low here, we are going to very likely take out this high up here. Now I'm going to move that, take that away. Now let's zoom into this and look at it on a much lower time frame. Now, if so I'm going to take out this. Let's delete this for now. So let's delete this. Now, notice that since we came down into this zone, we made this what you would look at as a bullish engulfing candle, more or less, and we pushed up. Now, that is not necessarily my point, or in terms of what I was looking at, is when I go down to the lower time frame and look for structural shift. So there's no structural shift on the 4-hour chart. On the 1-hour chart, I think. Let's see. So on the 1-hour chart, so this was what I was looking at. So we had this push down. We are still, remember, we have to respect this market is still in control by the bears, right? Bears are in control. So since making this low, what you notice is price started making highs and higher lows. Even this low here is still, very well below this area here. You can see my what I was looking at. So I have this. I think I still have this pending order. I'm not sure yet. But I'm looking for the market to come into this zone and then come back and tap into this area, right? And you can see how my potential trade looks like. Now, as long as the price stays below this, stays above this low here, we are going to likely start running liquidity to the upside. Now, one thing I like here is this. So, I like to look for what liquidity does the market want to, what are some of the liquidity the market wants to run. Now, the market usually likes to run in the direction of the most liquidity, where most retail traders are looking as protected. So imagine people who were buying here because of this. They were imagining, okay, we're buying here because of this, so the market is going up, we put our stop loss down here, the market comes down, clear that out. Now, the market has also formed, so Wyckoff accumulation, it came up here, formed some sort of distribution. It's just weak to strong hand transfer, more or less, where we could see this then potentially push back up. But now that has to be with confirmation. You cannot just take, okay, this will do this because it has done this. So let's say this is the 1-hour chart. So let's look what I would then be looking for as the market starts to drop into this zone is some sort of confirmation as price starts to get into these lower areas here. So let me push this up. So this is a 15-minute chart. If price starts to drop into this, what I want to see, or what I would love to see, is some sort of candle, you know, what you could call ranging markets, or however you want to call it, accumulation, or however it is called. But you just want to see the market react around this zone, and then look for a shift in structure to then look to buy and take this up based on the higher time frame bias, right? So even though we're looking for entries on the 15-minute or the 5-minute chart, our target is based on our higher time frame bias, even though we'll definitely be partialing out our trades as the price is moving our way. Okay, so I think that is that on AUDCAD. We've looked at AUDCAD, we've looked at EURCAD, we've looked at pound, dollar, and then we've looked at USOIL, and as well as some trading sites on BTC. Okay, so I think I've covered all the things I planned to for today. The majority of the trades, and interestingly how I'm looking to trade them, I will cover more in classes on Tuesday and on Wednesday in the cutting edge trading room. So if you want to participate in that, make sure you join my trading room, and then to get access to those as well. Okay, so that will be all from me. Any questions, any comments? I hope you all enjoyed the training. I hope you learned something new. Give me your feedbacks, and then as usual, I'm going to be uploading this on YouTube, so you can always go and rewatch it there. It is Noah FX Pro on YouTube. So just search Noah FX Pro on YouTube, you'd see, and then look for weekly market analysis. And while you're there, leave a like and subscribe, obviously, and turn on the notification. Okay, that will be all I have for today. I'll be having another training today by 3, where we'll be looking at introduction to technical analysis. So for those of you who are still interested in that stuff, also do well to join me. Now, if you have questions, please ask.